If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from EverBank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Take action on your ideas. Always do your best. Doing your best means you take action on your ideas. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 60, NASDAQ down 9, S&P's down 5, gold contract up $7.50, trading at $1,258 an ounce. Silver up 21 cents, $18.39 an ounce. Platinum up $16 at $1,025 an ounce. Copper up 2.5 pennies at $2.67 a pound. Light sweet crude off 43 cents, trading at $54.01 a barrel. Notes: the 10-year note up 18 ticks, 125.19. 30-year bond up 1.5 points, 153.07. Bottom line, folks, it's pretty amazing. You know, we're in an area that the Fed saying flat out they're going to raise rates, but guess what? Between these notes and these bonds, someone's buying them, and they're buying quite a few of them. King dollar up 47 ticks at 101.100. Now, King dollar, each and every time it gets up to that 101.650 area, it gets sold. It gets sold down hard. You know, we get an ABC price projection on the way down of 96.925. The euro's trading at 105, and the yen is out here at 112.05. Bottom line, folks, you take a look at this market out here. We may have a miracle out here today, meaning that you're going to get a red market. Dow Industrials, this would be the 11th day. It already had broken records going all the way back to 1997, that it was up 10 days in a row. Pretty amazing. Well, to look at these markets today, we get a great guest. We get our man, Mr. Chris Gaffney, the president of EverBank World Markets. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's great to be on the show.
I'm telling you, you know, we've both been in this market a long time, as well as a lot of our listeners. And, you know, when I heard that number this morning, Chris, about the Dow Industrials, it just seems like every day it climbs up and it climbs up. And we know that the markets can climb up until they don't.
Yeah, and right now, I mean, at these levels, it seems that, you know, we're almost priced for perfection as far as, you know, nobody's thinking anything can go wrong. I mean, yes. When you look at the valuations across the board, but at the same time, you know, I'm smart enough not to stand in front of a moving train. So, you know, you kind of, you know, go along for the ride right now. But
no doubt.
There's a lot of things. I mean, you know, our earnings going to continue to support the levels that we've seen. You know, is Trump going to be able to come through with his tax plan, with his infrastructure spending, with all of the stimulus measures that they want to do, and at the same time, how's the market going to react to an interest rate increase? You know, we got the Fed looking to raise rates.
Yes, let's talk about that a little, because it seems that you know, I mean, what is your take on it? The Fed, you know, seems to be saying, hey, we're going up. And the market hasn't paid attention to it, that's for sure.
Well, the bonds haven't.
Yes.
They don't see the inflation. The Fed, but there's certain indications. I mean, we'll see next week. March 1st, we'll get the preferred Fed gauge of inflation, the personal consumption number, and for the first time, we'll see if we have met the 2% goal, and if we do meet that goal, there's not a lot standing in the way of the Fed increasing rates. I know that, percentage-wise, the markets are predicting about a 36% probability of a March rate increase. Even though there's not a news conference following the May, there's a 60%. The market's putting about a 60% possibility on a May increase, and then 72% by June. I think that remember they've said several times that they're going to raise. They're going to raise. In fact, going to raise 3 times this year. Well, they got to start if they're going to follow through on that promise. And I think we'll know get a much better, clearer picture after that inflation number, because there's certain members of the Fed that now think maybe they're falling behind, the inflation picture, and that's the last thing they want to do is fall behind, because then inflation, as you know, with the amount of monetary stimulus that these central banks have pumped into these markets, with the amount of liquidity that's out there, if they don't stay in front of inflation, it could get out of hand quickly.
No doubt. I'd like to swap gears on you just for a sec here. And, folks, as you come over to our website at TFNN, you can hit the banner, and I'd like you, I'm gonna put this up right here. Grab your passport and step into foreign currencies. You may have heard the intro when we were coming in. One of the intros, Carlos, okay, this is pretty cool. He had gone down, he was calling us, he was buying a house in Mexico. And the bottom line is that let's talk a little bit about, when people are either buying houses overseas, sending their children overseas, about how your foreign currency accounts work, Chris.
Sure, and we get the opportunity for clients to buy the foreign currency. If they have a need for that foreign currency, they can buy it from us and then wire it out. You'll find our conversion prices are amongst the best that you're going to be able to get. And so we convert at a very competitive conversion rate, and then allow you to either hold that in an account waiting for you to make the decision to go ahead and make that purchase. So it allows you to hedge that purchase somewhat, in that, as you said earlier on the top of the hour, the dollar's strong right now. It's been king dollar. We're at 101 on the dollar index. Some of these currencies are at bargain levels right now, especially when you look at Mexico.
Yes.
Some of the other emerging market currencies that got beat up, they've started to move back up. We've seen some decent returns in some of the currencies here recently, but overall the dollar is still fairly strong. So what those accounts allow you to do is you buy currency, you put it in an FDIC-insured bank account, and hold it in that account until you're ready to use it or sell it.
Now, you stay right there, folks. Chris and I are going to be coming right back. We're going to talk a little bit more about the World Currency Account. We're also going to talk about the Market Safe Core Commodity CD. Chris and I are coming right back, folks. Stay right there.
TFNN has just launched a special event in Tampa with Tom O'Brien, taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Our guest is Chris Gaffney, the president of Everbank World Markets. We are talking currencies right now. Chris, as we go through your world currency account, so it's $2,500 to open or $100 a month, right?
Yeah, we've got something called our currency purchase plan, which will allow an investor to dollar cost average into those foreign currencies. So with as little as $100 a month, you can walk your way into those foreign currencies. And we offer about 21 different currencies. And again, they're liquid accounts, so, if you have a need, we can send foreign wires for you, in that foreign currency. We can get you a check denominated in that foreign currency for transactional purposes. But most of our clients use it for investment purposes, and,
sure.
and establishing that diversification aspect of having foreign currencies and doing it using dollar cost averaging with as little as $100 a month is really what I think is one of the best ways to establish a position into those foreign currencies.
And these accounts, they're FDIC insured. You can do it in your IRA, correct?
Yeah, they're IRA eligible. So it's a great way to get that exposure into the foreign currencies. And they can click on the link right there on your website, and it'll take them in. Applying, it can all be done online.
Yes.
It's a very quick and easy process, and we've been doing this for a long time. We've been helping people diversify out of the U.S. dollar and getting some exposure into the foreign currencies. And, we've seen the currencies run up and down. Certainly, we've seen the dollar start strengthening here. It's been strengthening for the past, let's say 4 or 5 years. And so, it's hard to say, are we at a top or is it turning? But it's certainly, the currencies are certainly cheaper than they have been in a long while.
Yes, and what I've found from the amount of calls that come in, and I guess all of us are a lot more worldly now, too. That's the reality. The United States is huge. You got plenty of people out in California that are doing a lot of business in Mexico. You got plenty of people, up in Canada doing business there, and of course, Europeans. So it's kind of like compared to how you and I grew up, meaning years ago.
Right.
You really, I think people are more tuned to foreign currencies, and they're more used to it, and they realize that, hey, if I'm going to go over there, whether it's a vacation or my children are going over or I'm going to have an investment, it's a great way to diversify.
Right, and the investment aspect of it, the diversification is important. And you know, we talked about the dollar being very strong, but, you know, last year we had the Russian ruble appreciate by over 20%. And then included with that, you know, or not included with that number, that's just in currency appreciation, you would have got, you know, an interest rate of around 6.5%, or, you know, so you had some great returns. So there's always opportunities in the currency markets. It's a case where, you know, you can look at commodity-based currencies. You can look at, you know, geographic locations. You can look at a country that looks to be increasing interest rates and take advantage of that.
Sure. Now, you had just brought up a point. So inside these currency accounts also, is there an interest rate structure that the client also gets?
There sure is.
Wow.
In the cash accounts, what we call our access accounts, those are very liquid, and as you know, global interest rates are pretty low. So there's not a lot of interest that's paid on those cash accounts.
I'm with you, but it's interest, which is pretty cool. Right.
Right. We also offer the CD products, so the currency CDs. So if you have a longer term objective, you know, our shortest term is 3 months, our longest term is 12 months. So it's not a super long term investment, but you know, you can take advantage of some interest rates that are pretty attractive. The Brazilian real, for example, which is certainly a speculative currency, but we're paying 7.5%, which is a 7.71% APY for a 3-month Brazilian real CD right now. So,
that is
you know,
wild.
there's some interest rates that are, you know, that really help make the currency
attractive
investment even more attractive.
Yeah, no doubt. Now, when we start talking about CDs, folks, okay, if you go to everbank.com/TFNN, or you happen to be watching Tiger TV, you're going to see, look what we've unearthed. So this is really cool. We're going to talk about, you know, and depending on how long you've been listening to TFNN, you've seen these products come out before. So we have a new product, the Market Safe Core Commodity CD. Tell us about it.
Sure. It's a principal protected CD, 5-year term, whose return is going to be based off the performance of 4 different currencies, or commodities, rather. It's going to be based off the performance of sugar, gold, copper, and oil, measured by West Texas Intermediate, so WTI oil. So, and it's an unlimited upside. So, you know, you've got limited downside in that, you know, you get at minimum the return of your principal. And on the upside, it's whatever the average upside of those 4 different commodities over the 5 years ends up being. So we're going to take and measure the value of those commodities every 6 months. So it's a semi-annual averaging. And then at the end of the CD, we're going to pay you whatever that average upside is for those 4 commodities. You know, with a minimum of your principal only. So
sure. Folks, this is how this works. Okay, so you have a funding deadline. Okay, this is going to be March 23rd, and then there's going to be an issue date of April 10th. This is going to be pretty cool because, you know, when you take a look at these commodities, folks and Chris, okay, it's pretty amazing because gold right now is at $12.58. Well, the high was 19.20. Not that I'm saying that it doesn't have to go to the high, but guess what? Right. There's a lot of room in there, right? When you look at sugar, we're at, right now 19 cents. Well, the high in January of 2011 was 36 cents. Copper, we're 267. The high is 464. And then oil, forget, folks. Okay, we know oil had gone to the moon. We're at $54 right now, and then I get 2 different numbers here. The high is actually 147. That's in 08, but the last high was 112. You know,
yep.
So there's a lot of room in there.
And the key to this product, I think, Tom, is the numbers you just quoted show just how volatile these commodity markets can be.
Yes.
I mean, the commodity markets can be very volatile. So, you know, the key is there's no your principal is protected. There's no risk to your principal. So it's a way to take advantage of what can be very volatile markets and commodity markets and still have your principal protected. So it's a great product. They're IRA eligible. It's a great product to get some exposure to the commodity markets in your IRA. $1,500 minimum deposit. Again, it's an FDIC insured product that is easy to open here at Everbank, 5-year term. So,
and folks, and like when we talk about the currency account, there's no monthly fee. When we're talking about this account, there's no monthly fee. And when we do get back, we're going to talk a little bit more about this. But just so you can understand, every 6 months, this will price out. And I know many of our listeners are used to, when we talk about, daily directions, you got to think about this as that it's a product that's 5 years that's going to have 10 pricings, okay? Then you're going to average those out, which is so cool. I mean, because the bottom line is that, we'll talk about where we think we are right now, and I think, meaning, seriously, when you look at where we are right now, where they could be, it's pretty amazing.
Yeah.
You stay right there, folks. Chris and I are coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Our guest today is Chris Gaffney, the president of Everbank World Markets. Now, Everbank, you can go right to everbank.com/TFNN, see the Market Safe Core Commodity CD that we're talking about, folks. You can also give them a call at 855-750-4051. And, Chris, I have the gold chart up here right now, and I have it up for the last 10 years. So when we're talking this product, folks, okay, just so you can understand how this works. So you get 5 years, and every 6 months, once the issue date starts, which is April 10th, this will get repriced. So it's pretty cool, Chris. I mean, we're looking at 1256. The last low that we had in was December of 2015. And, well, I mean, we know that there's no promises out here either up or down, but it's pretty intriguing that we have a high out here at 1920. You don't need 1920 to make money on these. Chris? Okay, we will get him back. I'll go right into the market here for a second. The Dow right now is down 31. The NASDAQ is off 4. S&Ps right now are up down 250. Yeah, give it another 30 minutes as we come into this close. We have our man Chris Gaffney back. And Chris, I have a 10-year chart of the gold contract up. And,
Right.
when we're taking a look at this market safe core commodity CD, it's pretty amazing because, of course, there's no promises. We don't know whether it's going to go up or down. But, boy, at 1256 versus a high of 1920, it's kind of cool that you come up with a product like this at this point, and you have 5 years with 10 separate pricing structures in order to basically make money.
Yeah, and that helps smooth out some of that volatility in the market. And, commodities are all about supply and demand, as you know.
Yes.
And this really is a play on global growth. When you look at the commodities that we've included, sure,
Okay.
Gold is one of those, safe haven,
Yeah.
protection type assets. But, when you look at copper, sugar, and oil, those are all, going to benefit from global growth. And what we're looking for is maybe for the global growth to start inching back up. We've already seen inflation start inching up. If you see demand in China, come back, we know that copper has started to rebound also as an industrial metal, and the supply on copper has dropped pretty dramatically. In fact, I think we'll probably see in 2017 that it's going to be in deficit. So that's driven the price of copper up higher, changing that middle class in India and China are going to be more consumers and going to certainly add to demand for sugar and for oil, and the infrastructure building across all the different countries is going to help demand for copper. So it's a way to take advantage of that.
Sure. And, folks, when we go through this, just so you can understand, there's a guarantee of no loss of principal. Right now I have the 5-year rates up across the world, for treasuries, of course. But so the only opportunity, there'd be an opportunity cost, folks, if, in fact, you could do a 5-year bond at this point and you get 1.8%. So
that's what you're sacrificing, because there is no stated interest rate on this, but that's all you're giving up.
Yes.
In order to get the possibility of unlimited upside and principal protection.
No doubt. Now, can we talk a little bit about, because I know we have a lot of customers that are already there with you, and what's really neat is that once they open an account, right, they have the account open. We've been talking about a couple different accounts, but once they have an account open, they can go to a variety of different products that you have, correct?
That's right. And once they have that account open, the base account is going to be our yield pledge
Yes.
money market or checking account. And we call it a yield pledge because it's our pledge to keep that interest rate on that checking and money market account among the top 5% of all of the money markets and checking. So, it's a pledge that we're going to keep those interest rates high. Right now, our introductory one-year introductory rate is 1.11%.
Yes.
And that's a no-fee, checking account that has a lot of great, different ways to use it, and everyone gets that, and then you can go from that account, from that U.S. dollar account, into the market safes, or you can go into one of the currency accounts, or you can move over and do we have some pretty unique U.S. dollar-based CDs, a bump rate CD, and some other unique dollar-based investments. And finally, you can go into the precious metals, as you know, moving into some of the precious metals markets. And we've hooked this all together online so that you can easily move from one to the other.
And, folks, as we were just talking about the yield pledge account, the checking account, what's really cool, the Fed's saying we're going to go up in interest rates. The bond market right now is fighting them. So bottom line, though, they also have a yield pledge CD. And depending on where you've been in the marketplace, there's such a thing as laddering. And specifically, can you walk people through what laddering is, Chris?
Sure. It's if you obviously you can't predict where interest rates are going to go. So what you do is you put a certain percentage of your money that you want to invest into U.S. dollar CDs. You put it to work today,
yes.
And then maybe in a month, or you put one at a 1 year, and then you take advantage of a 3-year rate and a 5-year rate. You don't put it all into one investment, because then you're subject to, when that investment comes due, you're subject to whatever the interest rates are at that maturity point. So
sure.
By laddering them across different maturities, you're taking advantage of different areas of the yield curve, and your CDs are going to come due at different times, and therefore, depending on where the market is there, you're not all in on one spot. So, laddering across different maturities is always an important part of investing.
And you know what's so cool about it? And folks, you haven't heard this for years, because what has happened is that, the great bull bond market started in 1980, and we'll see whether it's over or not, okay? But rates have come down from then, and I happen to remember when, laddering on the way up, or, watching rates go from 7 to 14.5%. It's a great way that if you don't want to be in the equity market, that you want to make sure you always get your capital back, and you're making a percentage, which of course then people can sleep at night, Right,
and as you get older, as you want to make sure your money is there.
Yes.
Return of capital is more important than return on capital at some point. So, that's the key to at least put a percentage of your investments into something that is going to be there when you need it.
Yeah, there's no doubt. You stay right there, folks. Chris and I are coming right back. Now, in the break, you can go right over to everbank.com/TFNN, or you can give them a call at 855-750-4051. Chris and I are going to be coming right back right now, folks. You get the Dow down 17, Nasdaq's off 2, S&Ps are down 1. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So we have the Dow down 18. The NASDAQ just went positive. S&Ps are down 1. We have 18 minutes left, folks, for the Dow to go positive for the 11th day in a row. I'm telling you, miracles are just around the corner. Guest today is Chris Gaffney, the president of Everbank World Markets, and we are going to start talking precious metals. So, Chris, bottom line with precious metals, if we can start with the physical metals first, because I know a lot of our listeners have got a lot of precious metals off you. They've got two different things. They've actually got the eagles and then the bars. And if you can walk them through exactly what you have there. Yeah,
we have a wide variety of we carry all the bullion type coins. We don't do numismatics. We just do the bullion bullion coins and bars. Of particular interest for your folks, I think, has been our platinum offerings.
Yes.
And we do have some platinum eagles. Eagles have been hard to come by. The platinum eagles have been hard to come by. They've had some limited supply.
Yes.
We do offer the platinum eagles. We also have platinum maples. And then the most popular and really I think the best way to own physical platinum right now is the 1-ounce bars. They're cheap. They're cheaper than the others. They're $25 premium per ounce, which is going to be very competitive on the 1-ounce bars for platinum. And then there's an additional cost for storage or if we deliver them to you. But that's probably been the most popular item with your listeners, has been that those platinum physical.
Well, it's so intriguing. And folks, I've owned plenty of eagles. In fact, Chris, this is pretty cool. In 2003, I think I owned 10% of the whole run of the Treasury in eagles.
Oh, wow.
Yeah, of the platinum. But that was early. But I really learned something then, too. So watch what happens, folks, is that when you buy them off the Treasury, they were very expensive. They were great. But what also happens is this. As the price of platinum goes up, right, and it was a great run, what ends up happening is that the premium of those went down when you're at highs. You think they'd be higher, but that isn't how it works, okay? And that's why I've talked many times about, well, if you're going to get into platinum, you might as well get the bars, because why pay, in my case, off the Treasury, what was happening, folks, it's $200 or $300 you were paying per coin because they were proofs, okay? But right. The bottom line is even, you don't have to do that in the platinum market. It's really cool because, like, platinum's at 1028 right now, and when we take a look at this and we bring this back, there's been divergence in platinum, folks, this is the longest I've actually ever seen it, that platinum is actually under gold. But
right.
Platinum has traded to 2,300. You know, it's like, okay, I'm not quite sure why it's staying underneath that for so long, but that's a great deal.
I think it's, you know, there's real questions about global demand for automobiles. Obviously, that's going to drive both platinum and palladium. But you know, I think that it's a good entry point. Again, you've made that point, and if you're going to own it, you know, the physicals is one way. It gives you a certain level of confidence when you have the physical metals in your hands, and the platinum bars are an inexpensive way to do that. But you know, if you want the coins, we can offer the coins also. It's just they're a little bit more limited in availability.
I'm with you. So now let's talk about, now this is what's cool, folks. Okay, so picture, when you're in the physical space, you know, I like that because if you put them away, okay?
Right.
When you're trading, folks, okay, it's much harder. That's why when we bring Chris on with these products in the commodity market, it's not that it's you don't. I wouldn't encourage anyone to trade commodities. I just happen to get in that business. I wouldn't, Chris. You know, it's so hard. Do you know what I'm saying? Listen, I stepped in it, and it's 35 years later, so I like it. I'm in it. But the products that you have, to me, are much better products. People that are working, people that, you know, don't want to basically blow their brains out. Do you know what I mean? Because
well, we stress the diversification aspect. Again, we look for, you know, we're not telling people that they should be, you know, putting 100% of their investable net assets, or even 50% into precious metals and trying to make money at it, because you know, we think it's a diversification tool. It's another asset class that's not related to stocks, not related to fixed income. It reacts differently to the same, you know, external you know, factors. So it's a way to diversify your portfolio, and we make it easy. They're non-FDIC insured, of course, but you know, we have again a purchase plan.
Right.
You can put as little as $100 into the precious metals. So you know, if it's something that you've always thought about doing, you've wanted to buy platinum, you've wanted to buy gold, but you know, to buy, you know, $10,000 worth isn't really, you know, you don't want to make that commitment at these levels because you don't know where it's going. Do it in a purchase plan. Dollar cost average into it. You can do it into our unallocated accounts, which again is backed by physical metals. So it's not something that's not backed by physical metals. We go out and buy physical metals to back our unallocated accounts. And with the purchase plan, you can put $100 into gold, $100 into platinum each month on a regular basis and build up that diversification and build up that asset class into what you want it to be.
And what's so cool here, folks, is that, you know, when you hit the banner, you'll see, you go to the unallocated metals account. What you're going to see is that, you know, as Chris just said, you can do $100 a month as a purchase plan. You can open the whole account with $5,000. You get gold, silver, platinum, palladium. The next bullet point here is really important, folks, is that Everbank is telling all of us that they're going to buy within 1% of the price available. That's a huge deal, folks, because you have a large banking structure that is liquid in the marketplace. And if you've ever dealt with, whether it's the ads on TV or anything else, calling up, the fees are the most important part of all investments. But in the metal space, it's probably more important than just about everything in the financial business, Chris. Do you know what I'm saying?
Yeah, and the key there with our unallocated accounts is that, you know, we base the pricing off the London Fix.
Yes.
So it's something that you can look at each morning and know exactly where the London Fix was, and then your price is based off that. So it's not something that we're making up the market on. So it's a great way for investors that may not be comfortable making a big commitment into that asset class to start maybe dipping their toes in the water and start accumulating a position.
Well, you know what's so cool is that I'm bringing, for everyone out there watching Target TV right now, folks, what you're going to see is you're going to see the London Fix. And, you know, it's wild, Chris, is that I've had a Bloomberg forever, but I never, you know, inside the the Market Safe Core Commodity CD, folks. They give you the symbol. And it's so cool. When I was bringing it up, I says, okay, there it is. There's the London fix. And this is how these are going to be priced, okay, which is so cool, folks, okay? And as Chris just said, guess what? You can look at it every single day, okay, which is pretty amazing. You stay right there, folks. Chris and I are going to be coming right back. And bottom line is that, look at this. Chris, this market is insane. So the Dow's down 2, the NASDAQ is up 5, and the S&Ps are up 1.5. You stay right there. Chris and I are coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials right now are down 11. You get the NASDAQ up 5. S&Ps are flat. We have the gold contract up $7. Platinum is up $15 at a price point of $10.25. Platinum's catching some real bid out here. Our guest today, Chris Gaffney, president of Everbank World Markets. And folks, you know, we've been talking a lot of different products out here. The best way to get going with Everbank, come over to our website at TFNN. You can hit the banner and you open the yield pledge checking. You know, because once you get the account open, bottom line is that you can go into the currency accounts, you can go into the Market Core Commodity CD, you can go into the precious metals. Once you understand and take a look at all those different structures, the thing that's so cool about Everbank is that, number one, they know how to put products together and your principal's protected on a continual basis. Number two, and this is, I would say, the the largest thing for all of us, because we all have to have our money somewhere, is this yield pledge checking. So Chris, my understanding is that the way the yield pledge checking works, right, is that you will stay, EverBank, will stay in the top 5% of the whole country on a continual basis. Is that correct?
That is exactly correct. So we bank rate, bank rate.
Yes.
They go and publish the top interest rates being paid by the large banks, and our pledge is that we are going to be within the top 5% of the similar accounts from the 10 largest banks and thrifts in the big markets. So we're going to make sure that we keep that interest rate among the best that you can get.
Amazing. And if we, it's pretty cool in the aspect, and I can imagine in every business there's a lot of competition, but in your business right now, it's pretty amazing, right? How much competition there is?
Well, it's yes and no.
Okay.
I mean, there's not a lot of go out there and shop around for interest on checking accounts, and you won't find a whole lot.
Yes,
so
your products. No, I understand that. Yeah, that's
But yeah, in our other products, absolutely. And we try to stay ahead of the curve. We've always thought of ourselves as an innovative bank. We with the online capabilities and making it easy for mobile payments and for people to stay connected with their money, and that's the key. And then with our whole world market suite of products, we've tried to allow investors a way to diversify those holdings into foreign currencies, into precious metals, into the commodity markets, and do it in a really in a conservative manner. In
yes.
that you're not leveraging up, you're not using big leverage. You're not, while the markets can be volatile, our market safes make sure that, your principal's protected. So in that case, your principal is protected. And, it's a way to get exposure to those markets in a very conservative fashion.
No doubt. And folks, the education, when you get this open, the cool thing here is that, as Chris and I were saying, your principal is protected, and the education that you'll get looking at foreign currency accounts, understanding that they will pay interest, and then you say, okay, what's the differential? Now the cool thing is you can get that education and your principal, is basically still protected, which is really cool.
Yeah, and that's on our market safe. Now, I will point out that, if you invest into the foreign currencies, you're going to have market risk. So
yes.
on the foreign currency accounts, you can lose principal. If you put your money into, the Swiss franc, and the Swiss decide to devalue their franc versus the dollar, you can lose.
No, absolutely. Yeah. Well, listen, thank you so much. We really appreciate it. You have a great weekend, safe weekend, and of course, we look forward to having you on again, Chris.
Thanks, Tom. Enjoyed it.
Absolutely. Folks, always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. For speaking right here, Monday morning, 8 o'clock. If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from EverBank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. EverBank is a member FDIC.